so we can get started. Good afternoon, everybody. Welcome to session 3, where we're going to be taking a deeper dive into programs and resources available with the Farm Service Agency here in New Hampshire. Before we get started, just a few housekeeping items. All of our participants' mics have been muted. So if you have a question, we just ask that you put them in the chat using the chat feature in the menu bar, and then we'll save time at the end of this webinar for question and answers. The session is being recorded and will be posted to the New Hampshire NRCS YouTube channel with the other webinars in this series, and the link to that is already posted in this chat. And since you've registered for this webinar, you will be sent the link to the recording. And with that, just want to point out our civil rights statement. In accordance with federal civil rights law and the U.S. Department of Agriculture civil rights regulations and policies. Wanted to make it clear that the USDA, its agencies, offices, employees, and institutions participating in administering USDA programs are prohibited from discriminating based on race, color, national origin, religion, sex, gender identity, including gender expression, sexual orientation, disability, age, marital status, family parental status, income derived from a public assistance program, political beliefs, or reprisal or retaliation for prior civil rights activity in any program or activity conducted or funded by the USDA. And now we can introduce the panel. I am Andrea Bai. I work at the New Hampshire Farm Service Agency out of the state office in Concord. I'm the administrative specialist, and I also serve as the New Hampshire Beginning Farmer and Rancher Coordinator. With that, I'll pass it over to Monica.
Hi, good afternoon. I'm the loan officer for New Hampshire. It's myself and Rebecca Davis, who's my manager. We cover the state, and yeah.
And then I'm Melinda Marston. I'm the New Hampshire Farm Program Specialist. So I work out of the state office and I help the county offices with policy and training and things like that.
Good afternoon. I'm Tara Hamlet. I'm the County Executive Director in Grafton County.
We'll be hearing more from all these lovely ladies later on in the presentation. Just a quick overview of what we want to cover today. We're going to be taking a quick look at USDA definitions of beginning farmers and ranchers, socially disadvantaged farmers, and veteran farmers and ranchers. We're also going to do a high-level overview, just a quick overview of what the Farm Service Agency has to offer. And then we'll do a deeper dive into farm loans. Monica will cover farm loans. Tara is going to be taking a deeper look at our risk management program, which is the Non-Insured Crop Disaster Assistance Program, or NAP for short. And Melinda will be walking us through the Emergency Relief Program of 2022. That is not a typo. We are actually working on paying producers for revenue losses due to natural disasters from 2022 at the moment. And then we'll walk you through how you can participate with the USDA Farm Service Agency and provide you contact information through the New Hampshire Farm Service Agency directory. So, like I mentioned, as the New Hampshire Beginning Farmer Coordinator, I speak to a lot of beginning farmers in the state who are either new to farming or ranching or who want to expand their operations. And while USDA is a very large department in our government with many agencies and programs and resources, it can certainly be overwhelming as you try to go online and figure out what programs might be beneficial to you as a producer. And so one of the things that we wanted to do as a team with all the beginning farmer champions from the agencies was to provide this series of webinars to give a bit more in-depth look at what each of our agencies has to offer. And there's a link here to farmers.gov/new farmers if you do want to check things out online. But since everybody's operation is so unique, we definitely encourage you all to reach out and share with us what it is you're looking for so we can point you in the right direction. So definitions are important, especially when it comes to eligibility for programs and services. And when we say beginning farmer or rancher, it actually kind of depends on which agency you are participating with. And we have the slide that kind of compares the definitions among some of our agencies. But here at the Farm Service Agency, we consider a producer a beginning farmer who has not operated a farm or a ranch for more than 10 cumulative years. You can see NRCS looks at it in terms of consecutive years. So a little slight discrepancy between the two definitions, but 10 years, and that's a pretty long time to be considered a beginning farmer and rancher. And you may be eligible for, premium subsidies we'll be talking about today, or other benefits, administrative fee waivers and things like that if you qualify as a beginning farmer or rancher. We also have a category for socially disadvantaged farmers, and just an acknowledgement that, again, here on the slide, the term socially disadvantaged is not how individuals who fit the definitions below may identify as themselves, but it's included out of necessity as a legal term used in the Farm Bill to allow incentives and priorities and set aside for underserved producers within our programs. So you'll see that the NRCS criteria includes members of a group who have been subjected to racial or ethnic prejudice because of their identity of members of a group without regard to their individual qualities, including American Indian, Alaskan Native, Asian, Black or African American, Native, Hawaiian or other Pacific Islander, or Hispanic. And in addition, at the Farm Service Agency, we also add women into that socially disadvantaged category. And so for entities, we do consider farm entities if at least 50% ownership in the business is held by socially disadvantaged farmers and ranchers. And that could even mean a joint operation, husband and wife. It used to be 51%, and so now that it's 50%, those 50-50 joint operations are included in that eligibility category as well.
Andrea, it's still 51 for farm loan.
For farm loans, okay. For farm programs, it's 50.
Majority implied there is 51%.
Okay, good to know. Oh, and it does say that on the bottom, yeah, of that slide. So it distinguishes between farm loan and farm program. And then we have another category, which is the veteran farmer or rancher. And this can be seen as someone who has to qualify as a beginning farmer or rancher, or has first obtained their veteran status during the last 10 years. And their conditions for their release has to be other than dishonorable. And again, same with entities. We're looking at for farm program, it has to be at least 50% veteran ownership. And it looks like for farm loan programs, it has to be a majority. So 51, there's that discrepancy there as well. And again, these webinars aren't intended to make anybody an expert on our programs, kind of just letting you know what some of the things we have to offer. So we encourage you all to get connected, talk to a human being. You can reach out to me as your state beginning farmer coordinator. You could reach out to your local service center. And there's a link here in the slides to the service center, and we'll also have the FSA directory. So you can reach out to your local county office or to the Concord office to speak to farm loan. And with that, now we can dive into what the Farm Service Agency has to offer. And again, just a high-level overview. We do have quite a number of programs, but as you can already tell, probably based on some of our definitions, Farm Service Agency is divided into essentially two divisions. We have the farm program side of the house and the farm loan side of the house. And we're going to hear from both today. On the farm program side of the house, we have a number of programs and we put them in different buckets. So one of the biggest buckets that we work in is disaster assistance. So anytime there's, a producer has a loss due to an eligible weather-related event, or we're going to talk about the emergency relief program today, which is losses due to economic injury, revenue losses from a disaster event. That's when you really want to reach out to the Farm Service Agency, just like you would reach out to your insurance agent if you got into a car accident. You want to call Farm Service Agency if you have any kind of loss on your farm to see if we have programs that can help you. We also do a little bit with conservation program. Again, like we have an emergency conservation program, and that's related to disaster assistance, as well as some longer term conservation reserve programs. And then we have some safety net programs, and like for our dairy producers, we have the dairy margin coverage program open right now, so that dairy producers can kind of ensure that if their profit margins fall below elected coverage, they can get a payment and help stay in business. And then we have risk management programs, and Tara will be talking about the non-insured crop disaster assistance program to help producers cover their risks, as farming is definitely a risky venture. And then on the farm loan side of the house, Monica will be looking at all of the different loan options, from farm ownership loans to operating loans, microloans, and loan guarantees. And I just wanted to kind of highlight that the Farm Service Agency, even though it's a federal agency and our services are offered in every county in the country, what makes us unique and localized is that we are overseen by county committees. And this was authorized by Congress in the 1930s. Every county office has elected representatives that are farmers and ranchers and landowners who are participating in our programs. And so there are boots on the ground. They know the local conditions. They help ensure that our programs are being overseen and run properly and according to like the disaster conditions on the ground and the growing conditions, and they really provide a lot of insight and oversight for our day-to-day operations. And so in addition to helping us run programs, they're also, a person in the community that farmers can reach out to and ensure that underserved farmers and ranchers have a voice at the table. So for our county offices, we have 5 county offices in New Hampshire. For Coos and Carroll County, the office is located in Lancaster. For Grafton County is in Orford. Cheshire and Sullivan counties are co-located in Walpole. Merrimack, Belknap, and Hillsborough counties are all located in the Concord office. And Rockingham and Sullivan County are located in Epping. There's a service center locator here on the slide. If by any chance you're from out of state or farmers who live in a different state, you can do a national search through this USDA service center locator. And our farm loan team is located in the Concord field office. And we'll have a directory for each of those offices at the end of this presentation. And with that, I'm going to hand it over to Monica to cover our farm loan programs.
Hi, everyone. Brief recap. So for farm loans, FSA offers commercial supervised credit. It's still a business loan, but we're there for people who are unable to qualify for credit elsewhere, whether it be an insufficient down payment or a unique credit scenario. We offer both direct and guaranteed loans. So direct money is directly lent from FSA. We write and service the loan, never going to be sold. I'm your loan officer. That's who you contact if you have a question about your loan. Guaranteed is originated and serviced by another lender. So you would apply to them and the lender applies to FSA for a guarantee as somewhat of an incentive to move forward with the loan. With all of our loans, everyone has to meet the basic lending and eligibility requirements like citizenship, credit, legal capacity, collateral, etc. What's unique about FSA is that in terms of credit, we're able to look at kind of a global picture and not necessarily focus on a certain benchmark ratio or credit score per se. With regard to collateral, we can lend up to 100% of the market value, whereas other lenders may only go up to say 80% of that market value. Another note, FSA lends to the operator of the farm. So for example, you sugar or grow veggies on rented land, FSA can lend to you as the operator, since you're the one running the farm and making those day-to-day management decisions. We may not necessarily be able to lend to the owner of the property who would rent it out to someone else to operate. We won't dive into a lot of specifics about eligibility criteria. If you have further questions, my contact will be in a later slide. FSA offers two different types of loans, farm ownership and farm operating. And within those categories, we have a variety of programs and pathways which we can originate those loans. One of them is microloans, also down payment loans, joint financing agreements, which we also call participation loans. Another note is all of our loans are 100% financing, and we do have fixed rates. Our rates change monthly, but once you have your rate, it is fixed for the term of your loan. Microloans are limited to $50,000. They can be used for either farm ownership purposes or operating loan purposes, which we'll discuss a little bit later. They're kind of geared toward folks in their first few years of farming, as we only require a max 1 year financial production history, kind of a 1 year look back versus anything over 50,000 will have a 3 year look back. Use of funds are the same, whether it's a microloan or a regular operating or farm ownership loan. The only difference here is that repayment on a microloan FO, so a microloan 50,000 made for real estate purposes, the term is capped at 25 years instead of our max term of 40 on a regular. Operating loans. So we can use those to finance initial startup expenses, annual operating expenses like seed or fertilizer, longer term items like equipment or livestock, etc. Depending on what you're financing, the term is between 1 and 7 years, dependent not only on the useful life of collateral, but also ability to show repayment. Annual operating expenses, fertilizer, seed, those things that kind of come and go within that production cycle carry a shorter term than, say, purchasing a tractor, which we could term out a max of 7 years. The farm ownership loans, so real estate kind of category, used to purchase land, purchase a farm, expand a farm, make capital improvements, construct buildings like a barn. We can use loan funds to cover closing costs. Max loan limit is $600,000 with a max term of 40 years. We may not always go out 40 years. If you can show repayment at 30, we can look at 30 years. Let's see. With both the microloan and the regular farm ownership loan, there is a 3-year experience requirement. A max of 2 years can be substituted for things like military experience, education, small business management, things like that. Within that sort of farm ownership type loan, we have the down payment program and the joint financing. So for a down payment, it's available to beginning farmers, veterans, and SDA farmers. So it kind of breaks down, as you see on the slide, 5% is cash from you as the borrower. FSA will go in 45%. We have a max term there of 20 years, but the rate's as low as 1.5. So it's kind of there to sort of offset the 50% that another lender is going to come in at. And their minimum term, there being the other lender's minimum term, is 30 years. And then joint financing is available to everyone. We usually go this route when the farm purchase is maybe above our lending limit of the 600,000. So the farm's $1 million, FSA is only going to lend 600. So maybe a participation loan is where we go. Or if people need assistance with a down payment, since FSA funds can be used for down payment and closing costs. And this is kind of a 50-50. FSA is generally willing to take a second position. So it incentivizes a lender to kind of. And last but not least, we do have guaranteed loans, which are kind of targeted to people who may qualify for credit elsewhere. Maybe they've experienced a setback and a lender needs a little bit more of a push to move forward with the loan. Again, as I said before, you apply directly to the lender and the lender applies to FSA as a guarantee. Lender sets the terms, the conditions, your interest rates, facilitates the closing, but being FSA is backing the loan, we do still verify those eligibility requirements, collateral, ability to repay. And then within that guarantee program, we have the same options for operating loans, farm ownership loans, and we also do lines of credit on the guaranteed side. We do not offer lines of credit directly. If you're interested, there is a loan assistance tool online. I've kind of thrown a lot all out at you all at once. The loan assistance tool can help you kind of assess your eligibility, maybe figure out what loan is right for you, right for your situation, make sure you have what you need before you start applying. It also has a form support guide that hopefully explains how to complete the form in plain language. But as a loan officer, and based on my experience, it's good practice to pick up the phone and give us a call, and we can kind of help you navigate all of those things that, through the loan assistance tool. If you're kind of hitting a hiccup, just pick up the phone. We're happy to help.
Great. Thank you, Monica.
Thank you.
From here, we're going to transition over to the farm program side of the house. And again, really kind of looking at preparing for disasters or risk management, or on the flip side of that, what do you do when disaster strikes? And again, just emphasizing that what Monica was saying on the loan side, same on the program side. Pick up the phone, call your local FSA office, because you may be eligible for federal assistance. Some of the things you might be asked when you call the Farm Service Agency program side of the house is, have you experienced any farm loss or damage? When was the date of the damage? What type of damage? What was the impact? Where was the impact? And questions like that, so that we can figure out if there's a program that's available to help you. You can see on the left-hand side, this is just a, tip of the iceberg on some of the programs that we have to respond to disasters and help producers kind of recover from those disasters. And again, we're not here to go through all of them. That could take all day, but we are going to dive deeper into 2 of those programs today. And the first one we're going to take a look at is the Non-Insured Crop Disaster Assistance Program. So I'm going to hand it over to Tara.
Hi, thanks, Andrea. My name is Tara Hamlet, and I'm the County Executive Director for Grafton County. One of the tools we have available to farmers to help them mitigate crop losses from natural disasters is the Non-Insured Crop Disaster Assistance Tool. Today, I'd like to share a brief overview of the programs so that you might better assess if it is a good fit for your operation. The Non-Insured Crop Disaster Program, or NAP, provides financial assistance to producers of non-insured crops and provides insurance against damaging weather that results in lower yields, crop losses, and prevents crop planting. Eligible causes of loss for NAP include damaging weather such as drought, freeze, hail, excessive moisture, or excessive wind. Conditions related to damaging weather or adverse natural occurrences such as excessive heat, plant disease, or insect infestation, and other adverse natural occurrences such as flooding, hurricane, or earthquake. This chart provides the New Hampshire application deadlines for various crops. March 15th for most annual crops, September 30th for garlic, aquaculture, and value loss crops, November 15th for perennial crops, November 20th for perennial fruit crops such as berries, cherries, and grapes, and December 31st for honey and maple sap. The basic coverage under NAP covers the amount of loss that exceeds 50% of the production at 55% of the average market price for the crop. Producers can also purchase buy-up for an additional coverage. Buy-up options range from 50 to 65% of production in 5% increments at 100% of the average market price. As far as fees go, the cost of NAP depends on your choice of coverage. There is a service fee of $325 per crop, $825 to cover 3 or more crops. Multi-county maximum is $1,950, and this fee is waived if you are a beginning or underserved farmer. Premiums associated with the buy-up options selected are based on the producer's established APH, approved yield history, the market price of the crop, and the selected coverage level. An estimate can be given by reaching out to your local FSA service center for a quote. Premiums on buy-ups are due February of the following insurance coverage. For example, if 2021 was the insured year, the premium was due February of 2022. And beginning or underserved farmers received a 50% reduction in the premium. The NAP life cycle. This slide provides a quick snapshot of the program's process or life cycle in a crop year that has losses associated with an eligible disaster. The typical flow starts with a producer purchasing coverage, then establishing a yield and reporting their planted acres. If there is an event and a potential for a loss, a notice of loss is filed in the county service center. FSA will send a loss adjuster out to document the loss. The crop is harvested, if applicable, and the loss adjuster provides a final report detailing the actual acreage lost. The producer files an application for payment, which is reviewed and approved by the FSA County Committee, and a payment is made. If applicable, premium bills are due February of the following year. When signing up for the program, it is important to understand that you shouldn't expect a payment every year. The program is meant to help provide expense recovery and is not an income replacement. And as you can see in the diagram on the right, if there's not a disaster year and there are no crop losses, the life cycle is considerably shorter. And FYI, you will receive a quarterly statement of coverage. So is NAP right for your operation? The next best thing to do is just to get a little bit more information. The link on the bottom of the slide provides you with the NAP basic provisions and a NAP fact sheet. Then reach out to your local FSA service center to complete the needed forms and learn more about NAP. You can visit us in person, and we are happy to work through emails and online tools as well. Interpretive and assistive technology is available and appointments are encouraged. I will turn it over to Melinda now to talk about another disaster program available through FSA.
Thanks, Tara. So I'm going to be talking about the Emergency Relief Program for 2022. We previously had this program for 2020 and 2021 losses, and Congress extended the program to now include 2022 with a couple of different changes. And this is very, very high chunk. So it just gives you a very brief overview. So for ERP 22, it provides assistance to producers that suffered crop, tree, bush, and vine losses due to certain qualifying disasters and in calendar year 22. Some of the qualifying events could include flood, excessive heat, winter storms, freeze, excessive moisture, and qualifying drought. The ERP 22 application process is similar to what we've had in the previous ERP programs. Is just that they've changed it a little bit, and instead of, they used to call it phases, now they're calling it tracks 1 and 2, and the sign up will occur simultaneously for both tracks. So track 1 provides payments on losses that were received as an indemnity payment through NAP or through federal crop insurance policy. Producers who receive those payments should have already received a pre-filled form in the mail that was generated by the national office. Producers will need to certify that they agree to purchase crop insurance or NAP at the required level for the next 2 available crop years, which is called linkage, and that the loss was caused at least in part by one of the eligible weather events I already said. The form can then be signed and returned to your local office. So for track 2, it's going to provide payments for losses of uninsured crops and for crops that had NAP or federal crop insurance but did not receive indemnity payments. So track 2 is designed to assist producers who suffered a revenue loss due to eligible weather events in 22 when compared to a benchmark year. I'm not going to go into details of what a benchmark year is, but that just gives you an idea of what it is. There are no pre-filled applications for this track, but producers can get the application forms from either the local county office or from the ERP page, which is on farmers.gov. It is important that an application is not considered complete until we have both the form an FSA 524, which is the application, and an FSA 525, which is the agreement to purchase crop insurance or NAP coverage. There are some crops that are ineligible for this program. One of them is forage that's intended for grazing. So on to linkage. Just a little bit more information about what linkage actually is. It is required in order to participate in ERP 22. And the producer is required to purchase NAP or crop insurance coverage for the next 2 available years. So an example is if somebody signs up today, but the insurance deadline for the crop was September 30th. The producer is not required to get 2024 coverage for that crop for 2024. Instead, the producer would be required to purchase coverage for 25 and 2026. But if there's like a producer that has a rotation and they do not intend to grow that crop in 2025, then the producer would be required to purchase coverage in 26 and in 2027. There is no separate linkage form for track 1 and track 2, and applications must be complete, like I said, with the 525 form, which agrees to linkage requirements. Coverage for RMA insured crops must be purchased at a 60/100 level or higher for a coverage rate and coverage for NAP crops must be purchased at the catastrophic level or higher, which is 50-55. If neither crop insurance nor NAP is available for the crop, then the producer must purchase a whole farm revenue protection at 60-100 or higher, which is through RMA. So these are just some resources. If you need to know how to find a crop insurance agent, these would be some ways to find the RMA agent to get some crop insurance. And then the next slide is just some resources about ERP itself. There's an ERP tool and how to find the applications. As the previous speakers have said before, when in doubt, just contact your local county office. Well, back to Andrea.
Thank you, Melinda. So for those of you who have been farming the past couple years, or maybe you're thinking about getting into farming, I would say weather patterns have been changing a lot in New Hampshire. This past year, 2023, we had secretarial disaster designations for excessive moisture and for a freeze event that killed off all the peaches in the state and a lot of other fruit crops. And in 2022, for which ERP is paying out losses, it was a drought year in many counties in New Hampshire. We had D2 drought for 8 weeks, which triggered a disaster in our state for those losses. So we're seeing alternating patterns of different kinds of disasters year in and year out. So again, FSA is trying to help producers recover from losses retroactively, but also by encouraging people just understand that there's risk involved and encourage people to participate in those risk management programs. And so I wanted to cover real quick, if you're interested in participating, whether if it's in farm loan or in farm programs, to reach out to your county office. And the first step will be to complete this form right here. It's a customer data worksheet. It collects basic information for the producer, including your name, email, address, and we do collect your tax ID number if you're planning on getting a payment. So if you're participating in a program where you're expecting a payment, or you want to get a farm loan, we do require that you participate as you are filing your taxes. So if you're farming as an individual, then you can apply as an individual and give us your social security number. But if you're filing a Schedule F with an entity, if you have a joint venture, or if you have an LLC or any other kind of established entity with a tax identification number, you'll be filling out one of these forms for your entity, as well as one of these forms for each member with a share of an interest in that entity. And your county office will be able to help you walk through this form, but it's pretty basic. And again, as we talked about and Tara mentioned, it's highly encouraged to set up an appointment before visiting the county office, because they're going to end up spending quite a bit of time with you to kind of walk you through the process of enrolling. And some of the things you're going to want to bring with you to your first appointment. So we look at, I got to advance the slide on here. So you're going to want to bring your proof of identity. So that could be a driver's license or a social security card. And then you're going to be enrolling your farm. So if you're looking to purchase a farm, we understand that you may not have this information yet. But if you have a farm that you're operating and you don't even need to own it, you could even have a lease on the farm, but we're gonna need to register the farm that you're operating, and so you'll need to bring with you either one of the following: either the deed for the farm, or you can get the tax card, and those are available publicly online if you don't happen to own the farm. And then we'll need a tax map as well, because we will be drawing your boundary, the tax boundaries into GIS and assigning you a farm number. And again, if you don't own the property, we would need to see some kind of acknowledgement or a lease agreement from the landowner that in fact you are the one operating on that land. And we talked already about for entities, any kind of backup documentation you have for that entity, an IRS form showing that the name and the tax ID number are matching. Helps us enter that entity into the system so that you can participate in our programs. And at that point, once we get that information, it will take time. It's not automatic. We collect that information and then we work on it. And it could be a couple days, it could be a week, but we will get back to you with your farm number. It will have been entered in our database. You'll get a map with the boundaries on it, with its own farm number. And then you'll automatically be enrolled in our newsletter service. It's called Gov Delivery, where you'll be receiving routine program notifications about sign-up deadlines and things like that that are important to people participating in our programs. And you'll also be eligible to either run for county committee or vote in the county committee elections that we had been talking about before. So again, can't stress this enough. Please reach out to your local county office. These are the phone numbers for each of the offices. So if you're even just want more information and you're not ready to sign up yet, we highly encourage you to pick up the phone and speak to one of the staff in your county office. And again, just providing some quick links for more information. You can go to fsa.usda.gov for a look at all of the different programs FSA has to offer, or farmers.gov has a larger, higher level overview of what USDA has to offer farmers. And if you're interested in receiving our newsletter and you're not already in our FSA database, you can sign up to get into the Gov Delivery newsletter at this link here. And that was all we had for our presentation today. I don't know if anyone has any questions. Feel free to put them in the chat and we'd be happy to answer those at this time. I know we threw a lot of information out there at you guys, and so hopefully we didn't overwhelm, but don't be shy. We'll be here. We'll stay online for another few minutes just in case anybody decides to reach out. You're welcome, and thank you all for joining us today and for participating, and I hope to be hearing from some of you all in the near future. All right, the last non-USDA person has logged off, so I guess we'll conclude this webinar. Thank you, everybody.